ValU's IPO just went full roller coaster, up 850%, halted trading. Amazon buying in, and no one seems to know what just happened. We try to make sense of it. Careem shuts down rights in Pakistan. Is this the end of the super app dream or just a tough micro call? And when should founders cut their losses and leave a market? Applied AI raises big from MEVP, G42, Basem, and EM, claiming they're building large work models instead of large language models. And OpenAI wants to kill Google Docs and Microsoft Office. What happens to SaaS when ChatGPT becomes the new workspace? Let's dig into all of that. Hi, everyone, and welcome to a new episode of the VC React podcast. Every week, we bring insights and reactions from top VCs, LPs, and angel investors, reacting to the latest news on startups, VCs, and investment rounds. Let's jump into it with our amazing guests for today. Ivo Detelinov, General Partner at Salica Oryx Fund, Basem Abu Dagga, co-founder at The Learning Curve Holdings, Salim Washeely, partner at Sadu Capital, and my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. This episode is brought to you by OCTA, the AI-powered finance automation platform built for modern businesses. Managing receivables is not one task. It's dozens of repetitive ones. Correcting invoice details, updating PO numbers, following up on payment status. It's operationally critical, but painfully manual.
OCTA changes that. It helps you automate your financial operations, starting with accounts receivable, so you can focus on what you're actually good at, growing your business. From contract to cash, OCTA's AI agents handle everything: invoice creation, reminders, dispute resolution, payment tracking, reconciliation, even financing. You don't need to learn how to use OCTA. OCTA learns how you work. It adapts to your SOPs and existing workflows to get the job done. Finance teams at Careem, Lean Technologies, and Outgram rely on OCTA to reduce admin time, speed up collections, and unlock cash flow.
If you've heard of them before, you know that they used to say 100 companies use OCTA. The number is now 500. They are moving fast. And that kind of growth only happens because the problem is real and the solution actually works. Automate the finance work that slows you down. See how at weareocta.com. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Hi, Jamie. Let's start with a follow-up on a story from last week. What's the update on ValU's IPO?
Yeah, and I'll try and keep it short and sweet. I spent an inordinate amount of time with ValU this past week. I wrote about them to a sillily extensive stage yesterday as well. I deep dive that I published. In terms of an update, it listed great. So it's made its market debut on Monday, becoming the first consumer finance company to list on the Egyptian exchange, which obviously is an amazing milestone in its own right. The ticker, ValU.ca, and as you mentioned in the introduction, Ahmad, surged 852% on day one, closing at 7.4 Egyptian pounds above the reference price, which was 0.78, actually hitting the upper limit. So she just wasn't allowed to go any further.
Wait, Jamie, let me ask you this. What's the upper limit?
Yeah,
I know.
Same.
Yeah.
What is the upper limit of the Egyptian
I thought it was
exchange?
plus minus 10 or plus minus 20.
1,000%?
But this is, yeah.
Yeah, this is a great question, and unfortunately, I don't have clarity for you on this either. At this juncture, all I know is it's continued to trend upwards since then as well. Again, yesterday, I'm not entirely sure. I've been on a plane overnight, so I don't know. I don't know where it's finished up, but I do know the initial market cap I think was set up at $325 million, which, look, as far as I'm concerned, is conservative based on everything that I've read and consumed. I think they're erring on the floor, very bottom of the floor as opposed to the ceiling. I think it's already shot up to about $375 million at this juncture as well. But in terms of threads to pick up, Amazon, I think, is particularly interesting. I think the relationship between ValU and Amazon has always been slightly unclear, maybe. I think this has shed a small bit more light on exactly what the situation was. Obviously, there was that initial interest, I think it dates back to 2020, and then it emerged in 2022 that they'd taken some sort of stake, and they've now converted this into actual shares. So this long-standing option is actually converted into a 3.95% share in the company. So Amazon on board, which is interesting. So they're getting a slice of the MENA fintech pie.
So many questions here, to be honest. Like, for example, what really happened? How come 800%? While I checked on the EGX, the maximum is 10%. Sometimes it's 20% plus minus 20%, and then the hold. But within one day, 800%. And how come the price was 0.78 pounds? And then Amazon comes in and buys on the first day at 6 pounds. I don't know. It doesn't make sense. Maybe the initial price was 6, not 0.7. I'm not sure. Does any of you know anything about this?
I feel that the option to convert is what makes it attractive for Amazon to come in. I mean, clearly Amazon has offered a lot more than just money here. It's not, and if even. So they've come in and they've said, hey, listen, we've given you all these credits. Can we convert at this amount this time? And that's when they realized the buzz has been going crazy. I mean, a company like ValU that's recently had this miraculous approach, and they've done so much. Even within their competition, they've rose very quickly. And again, they're backed by a solid EFG type of setup, which a lot of investors feel a lot of comfort in. And so do regulators as well. So that's where maybe if I'm a bit controversial, some of these things in these parts of the world might be given a hidden supported hand from God, as they say, that allows them to go to the next level.
That's a nice way to put it. Okay, sorry.
I believe the strategic value for Amazon is super clear here. We also how from the announcement of some certain big retailers here in Saudi, without naming names, they are all struggling with while they started to see a big spike of their customers relying or paying or using buy now pay later solutions to do commerce through their online or even offline stores. So to me, it's just a no-brainer. And on this specific price, I think it's a good move for Amazon.
But Salem, would you go into a market like Egypt as an Amazon to be the first equity kind of type of investment, which is, I mean, in a fintech of this nature?
Why not Egypt? You talk about population, it's amongst the largest in the world. So I think it has potential. Why not?
I mean, if you think of the consumer finance landscape in Egypt, and you think of a buy now, pay later type of product, and you think of Amazon, with its credits. I mean, this is and a hype as well. And, someone waking up to say, quickly, look what's happened, this shot. And then everyone's attacking the stock market to try to acquire these to get a piece of it. I mean, there's a lot of fundamentals behind it, but there's a lot of drama involved as well, too, somehow, I mean, this is maybe more coincidental than really, again, there's the numbers speak for themselves, but there's a lot of other external factors that have come into this for sure.
I think there's some financial engineering behind the scenes that we don't really know about. Ivo, what's your take?
I completely agree. We do not understand everything that we see. I'm actually reading up on it, and I think eventually we will see more analytics from, data companies in the region and other articles. So we'll get to the bottom of it for all of us who actually want to understand everything behind the structuring. Obviously, we from the Oryx Fund are watching Egypt very closely. We do have a few investments, not many, because we've been very cautious on Egypt, but we cannot deny that the Egypt population, 120 million plus, I believe, is very, very attractive. And we can debate foreign currency fluctuations and lower perhaps purchasing power vis-a-vis the GCC, but 120 million is 120 million. So I think we will see more large branded corporates and more international branded funds making inroads into Egypt. And I think people are now comfortable with what Egypt has to offer. And I think we will see more of this, which is actually from 30,000 feet view, very positive, not just for Egypt itself, but for the entire MENA region, because Egypt is obviously a center of that MENA region, which is a focus of so many funds, including ours.
So Ivo, you've touched on a few things. Allow me to go back to two specific. One is that, and I love how we're at the cusp of when we're talking VC, we're in a situation where we need to jump taking remarkable risks and crazy types of leaps based on no fundamentals sometimes. And this is where I grapple with this. I mean, I've got a few more gray hairs than this shows. And so you've been around when there's all these hypes and buzzes, and specifically with all due respect to some economies that are great at creating these hypes. So everyone's racing towards it, not knowing what they're buying. And then next thing you know is like, wait a minute, the regulator says this, or there's, you know, and all of a sudden you've all this hype, and it's what people are buying into, which I'm very reluctant to. And now VC, there's an element of taking your you know, your heart and soul and jumping in. But take FWD as an example. I mean, I've done a little bit more research, and I've been aware a little bit more about this. So FWD is a company that's been around since 2008, and they've been growing steadily. They've had a remarkable journey, and they can easily switch and they're already expanding into the buy now, pay later space, and kind of being one of the larger players with Aman and a few others. They can relatively quickly come in and take over the market because they're already part of the payment gateway. So the businesses are technically using these guys. And it's mind-boggling sometimes trying to wrap your head around what might be more hype than reality, and someone's, you know, driving these types of investments, you know?
I don't know.
Yeah.
Look, I have to push back. I don't think there's anything hype about ValU.
Really?
I think this has the most extraordinary fundamentals in terms of going through the figures. I don't think there's anything even remotely.
I mean, it's just that mad increase in valuation. You don't have that.
I don't think it is. I mean, look, I mean, in terms
notice.
of when Amazon invested back in 2022, I mean, that was at a valuation of $235 million. So in reality, it's been a relatively, you know, it hasn't been a colossal increase since then. So I think that's potentially why they've opted in at that particular share price, is that it's a pre-agreed option that they could opt into. But I think in terms of the underlying fundamentals, I mean, it's 25% market share of the Egyptian consumer market. Obviously, a fantastic macro tailwinds at the moment. The geographic hedging, as far as it looks like they're going to be entering the Jordanian market pretty imminently. Saudi is something they'd explored previously with the Takatkah family back in 2022. That ultimately didn't come to fruition. But they have an incredibly diversified product suite as well. I mean, buy now, pay later is the on-ramp. But I think it's become much more developed than that since then. Whether that be auto financing, where they've grown, you know, exponentially over the course of the last year via partnership with Cylinder. So I think they cater to such a broad demographic as well, from people who are paying for something with 10 Egyptian pounds up to someone who's paying for something with 10 million Egyptian pounds. You know, they're catering to a massive demographic as far as that's concerned, from like the ultra wealthy to, you know, sort of the burgeoning kind of lower middle classes. I mean, I just don't see anything hype about this whatsoever. I think this is massively
you know what,
underpriced.
Jamie? I asked Perplexity, show me the last IPO that went that high in the first day. And it was, I think, in the 1999 in the US.
And that's what I'm saying.
Internet companies.
NASDAQ.
Yeah, Jamie, you'll never see valuations go through the roof in such a short period unless it's inspired by these hypes that are created. And then again, I mean, while the fundamentals are there, there's a lot of ambiguous stuff. I mean, we're talking in the middle of maybe a crisis hit zone. The whole region is also, you know, grappling with a lot of, you know, exciting or not so exciting activities. There's also the economic prosperity of the Egyptian economy being, you know, going where it's at in a sense that they have their depreciation. They're trying to control that of the currency. There's all sorts of external factors, and that's why I'm saying it's a little too much of you know, there's a lot more happening to this. So, but again, I respect your point of view.
Jamie, thank you for starting with such a controversial topic. Let's go to the next story.
Okay, awesome. I don't think it's going to get any less controversial when we move on to Careem now. This was announced last week by Mudassir on LinkedIn. He shared a post. In that particular post, he said that they're announcing a new chapter for the company. This is just verbatim a quote. With a heavy heart, they shared this update. Careem will suspend its ride-hailing service in Pakistan on July 18th, adding that this was an incredibly difficult decision. Macroeconomic reality, intensifying competition, global capital allocation made it hard to justify the investment levels. So yeah, Careem Rides is no more. They're still going to have a presence. So this isn't goodbye. It's just a kind of shuttering of the ride-hailing operation. But look, I think this is unsurprising. I think there's been a number of reports that have come out to suggest that this is something of a quiet wind down for the last 2 years. In reality, obviously, the emergence of InDrive, who just pummeled them in such a short period of time from a market share perspective. And I think you have Yango there now as well. So it's extraordinary, really, the extent to which they lost their like seemingly insurmountable market share position back in something like 2019 to have ended up in this scenario. It's extraordinary, really, on one one.
Okay, Ivo, let me start with you because you're leaving us in 10 minutes. First, Uber stopped serving Pakistan, and now Careem. Mudassar says macro issues, competition, capital allocation. What does that mean? What do you think is really happening there?
Yeah, I don't think it's currency, because I think the worst of maybe the Pakistani currency possibly is behind us. Many people are contrarian now, saying that Egypt and Pakistan will improve. The currencies will appreciate. Of course, no one has a clue, but it just feels like the currency may actually be on the upswing. I've also been reading articles of a quiet, silent wind down. Maybe it's more of a sign. So putting currency aside, because you don't enter or exit a market purely on currency, because currency can fluctuate. I mean, in 2 years' time, the currency may have appreciated versus a basket of the developed market currency. So I don't think it's currency fluctuation related. That would be akin to day trading in the trading world. So I don't think companies make decisions based on that alone. I believe it's competition, and I believe it's probably people accepting far lower margins. I mean, maybe the margins are too high, and maybe people are accepting really razor thin margins as well. So competition in a market as big as Pakistan may also be indicative of the market maturing. So for the consumer, it may actually not be a bad thing for the market to be maturing and for the competition to be so intense that the company withdraws. Again, I don't think we know the exact decision making, and I think over time we will, but it feels to me it's more competition and margin related than currency, for example.
Yeah, Salem, what do you think?
It's a clear, I think, repositioning strategy. It was clear, Mudassar has been saying this all the time, that there are certain markets that are doing very well in terms of economics, some that are not doing well. Reaching that stage where you are now mandated to deliver better returns to your investors, meaning to adjust your financial statements, your profitability, focus on profitable markets. It's a classical move from Mudassar.
Basem, what do you think?
Yeah, I think I agree with both of you. I don't have any controversy here, unfortunately, but I'd like to bring in some.
No, I want some.
I want to bring in some conspiracy theories
Oh,
here
no.
as well.
There we go.
I'm basically,
there we go.
no, I'm gonna throw at you a few other things apart from the competitiveness naturally of Yango, which and InDrive, who are far more efficient, it seems. I also want to reflect on the culture of the Pakistani consumers. And they're also very brand sensitive. And, there's a little bit of where the source of the company is coming from and who what their policies are. And this is an international firm coming in, and then there's going to be, there usually is a bit of a tribal nature when it comes to the Pakistani drivers themselves and the operating model. I mean, while Pakistan is probably one of the most attractive markets and in need of a disruption of this nature to continue, it seems that it's not been able to be run efficiently to the liking, whether they're winning on the hearts of the drivers or the consumers, and running it efficiently as well. So that's kind of my 2 cents on this.
You can add to that, Basem, lack of developed infrastructure in the country as well. I think Careem excelled in countries where infrastructure is developed. You have like a mature payment ecosystem, regulatory frameworks are there. So I think this is where they excelled actually the most, where you don't see that actually in Pakistan.
Very true, very true. I think, and that's probably where it comes back to the economy of Pakistan looking for that type of disruption from a sense of, well, it's no longer disruption there, but looking for that sort of service because of the instability of the conventional public systems or the current taxi ride-hailing setup. So while there's a lot of interest and demand, I think the fact that Yango has come in strongly, and we've seen them in other markets penetrating, taking a big piece, It seems that it was more on the operational level here that they weren't able to excel at. They could have maybe done something better.
I don't know much about InDrive, but I used it in Egypt to go from city to city, and I thought that's their focus. I'm not sure in Pakistan if they're working inside cities. But anyway, Ivo, for many years, we've been hearing about so many people trying to create a super app in the MENA region. And Careem is one of those who are working on that. But now, what happens to their super app dream? Can they still do it in the MENA region?
And I think it's trial and error. Actually, it's trial and error in emerging markets, and it's trial and error in developed markets. I guess the pace of change, i.e., the frequency of trial and error, is higher in an emerging markets like ours, where tech, probably dates back to venture-backed tech, let's say, dates back to at best 15 years, but possibly 10 really. So I don't think I see evidence of super apps not growing, but there will be a trial and error process, and it's a dynamic, evolving process. So I don't think the super app gets created and it's static, and then once in a while you have the new version update. I mean, we will see this evolve with consumer tastes, unit economics, different markets added to it, languages, functionality. So I really don't have enough evidence, if any, that super apps will not be continuing their rise in prominence.
Well, actually, I think this is enough evidence, I think, today that it's not working out here in Saudi, and from our perspective in Sadu. I think it's not working out. It's more complex to operate multiple businesses. It's hard to communicate this to your potential clients, your consumers.
Got it. And
Yeah.
so would you say we will stick to maybe 2-3 different functionalities, but not 10, maybe?
Exactly. That's what I think.
Yeah.
And what defines super app? There are super apps and investment. There are super apps and delivery, and super apps and communication. So maybe, there's no one super app for everything. Maybe, I don't know.
Vertical specific super app.
Yeah, you've got that. You've got your captive audience, so you might as well just expand on services. And now it's bolt-ons, right? You're not really creating much value. But if you have like a WeChat platform that you just plug into it everything, and it becomes one of those major type of so your go-to place. I might disagree, because I think the future is going to be going with these super apps, because it's just so much easier. And then, to be honest, the incremental improvement in the value of the service that's added, if you go direct to a specific expert style app, which we'll probably talk about in the next discussion, it's not going to be substantial. So you're like, why should I have 1,000 apps or 100 apps when I can kind of consolidate one? Okay, it might not be the best in this, but it's just my go-to place.
Banks and telecoms have a very good chance to create super apps. I mean, first they have cash, and second they have captive audience, which is permanently on that super app, because you are both a banking consumer and a telco consumer. I mean, STC Bank, for example, I'm a new customer. I mean, they can keep, I like it a lot, very light and fresh and crisp. So they can keep adding other functionalities. I mean, maybe not food delivery and ride hailing, but then who knows, right? If a menu pops up, I'll definitely give it a try. But I think banks and telcos have a very good chance to create super apps.
But I think it's a big mistake to assume that once you acquire the consumer for a certain offering, then you introduce something else, you assume it's gonna cost you $0 to acquire the service.
Because of what? Loyalty to other apps, maybe, or what?
Awareness.
Awareness. Yeah.
I got used to, accustomed. Now you introduce something else. I need to be aware. I need to believe that you are gonna excel at that service as well.
Got it. Yeah.
Jump in as well and use that.
Fair point.
Yeah, maybe super apps will be aggregators, not just companies working on everything themselves. Or
that also
partnerships.
Yeah. But from the consumer perspective, that is a super app. Yeah. How it's done on the back end is kind of, yes, that's a good point.
I think you need to earn the right to be a super app, as opposed to I think you're seeing this emerging idea as well. I don't know, I've seen it two or three maybe Moroccan examples of startups like who've raised like a pre-seed or seed with the idea that they're going to become a super app. I think starting from the outset with the idea that you're going to become a super app, I don't know. I think that's extraordinarily ambitious. I think to the point, you know, I think you need to develop that reliability and servicing one specific vertical, the sort of Salem mentioned before you start cross-selling left and right. So yeah, no, I have a broad agreement on that.
Gentlemen, I really regret jumping.
Thanks, Ivo. Cheers, man.
Salem, let me ask you something about Saudi market now. Every founder that we meet, they want to expand to Saudi, raise capital and spend it there. When should founders admit that a market isn't worth the burn or competition is too high in that market that everyone is chasing? What metrics or signals should drive a decision to expand to a market or pull out of a market before burning too much?
Well, it's an interesting question. I don't think there is a straightforward answer, يعني, framework that you can apply to all verticals or even horizontal play as well, يعني, sometimes. But probably, يعني, one thing I would think about here is resistance, يعني, from consumers. I think if it comes to a play where actually you start spending a lot in a very short term, especially let's focus here on B2C. If I talk about B2C here, imagine you spend something on marketing, this amount of USD in marketing, and it took you longer than any benchmark in the whole world to retrieve that X amount of return on market spend. I think that's one metric. If you see that it's lagging behind all the benchmark in the world, that means you are not either bad marketing strategy or bad market to be in the first place. So benchmarking with global metrics, I think it's or global markets, that's the way to go.
Okay, Basem, what do you think? Everyone wants to go to
Wallahi,
Saudi.
Salem, the biggest challenge with what you just said is that actually you said in the end, it's comparing it to the local regional play or the global metrics, whatever they might be. And unfortunately or fortunately, if you want to eye a specific market that is your go-to market for and almost any startup, you go directly to Saudi. It just ticks all the boxes. Mashallah, population, purchasing power, excitement from the government to really expand it. There's all sorts of, and there's innovation. There's a young population, and there's also a lot of users, which adopters, and people are very flexible in Saudi to take on. Yeah, let me adopt this. Let me try this. So it has been a phenomenal market. And now, when do you pull out was the initial question. And no pun intended, the challenges of that are basically associated with your business plan or your go-to-market strategy. And sometimes you might need to tweak and pivot. And again, I would think, sadly, I would really encourage founders to keep going at it as long and as hard as they can to get it to work. Because if they retract from Saudi for the obvious reasons that it's a difficult market to penetrate from their perspective as an outsider, that's because they haven't found the right partnerships, the right knowledge, the right expertise that they need locally. And that by itself is a bit of a failure, because then they're going to go to the next best market in hopes that they're going to succeed there. And good luck. They're much smaller, they're much whatever,
True, but when do you give up? When do you start saying this is not working
that's the $1 million question. I think it's a question of grit, tenacity, and pulling the plug when you feel that's the end of your road. I'm the worst person to ask about that. I've got a bit of a...
And is it only the founders or also the investors and board members who would keep pushing them to
they
go
drive
in
you
Saudi?
too.
Yeah.
So it's all of those put together. But when do you pull out is when do you pull the plug? I mean, I've been on both sides as a founder, and technically we built ventures as well as reimagined education collective. So that's part of what we do. And you're in this level where you're saying, what, you're giving up now? It's only, you're that far. But then if it's proven that there's no future, it's not going to work, it's not competitive,
So
then you have
sunk
to
cost fallacy. Yeah.
Absolutely. Yes.
Okay, Jamie, what's next for us?
Okay, yeah, applied AI. I'm not entirely sure what the deal is here. This was something that was announced earlier this year, that they raised a 55 million Series A round. This is sort of news that it has been oversubscribed, and we see the emergence of some regional backers. MEVP and Ian has emerged as a strategic backer as well. So I'm not entirely sure if this what the nature of this. I haven't been able to get clarity on it exactly yet. But look, it serves as a, we can discuss it in any case, because I think there's a couple of interesting things to unpack here. In terms of the company itself, it was founded back in 2021 in the UK. So they made the move to Abu Dhabi in 2022. Then subsequently builds automation tools for a broad range of sectors, from healthcare, financial services, government. So look, it's enterprise grade. And as you highlighted in the introduction, Ahmed, a large work model. I haven't been able to do an adequate amount of research to discern exactly what that is, but I do know they have a proprietary work knowledge graph, which is designed to handle complex workflows with precision and scale.
I like the term large work model, but it sounds like a super app for automation for enterprises. Like they're working on every single thing and all the industries. It sounds like a lot. Where's the focus there?
Let me try to break this down a little bit. And Jamie, you might not like this again. I'm sorry, but hey, I've been in the region long enough for some preconceived notions here. So the first thing, there's a massive drive for AI investments here, right? So everyone's like racing for that AI, super solution that's going to take us to the next universe or next planet, I'll say. And so that's the hunger behind an investment is probably where oversubscription takes place, more so than fundamentals, again. And with all due respect, I'm going to take it a little bit more granular in hopes that I can defend this thought. So now here you're at a level where everyone's racing to invest in an AI startup, wherever it is. Now, very smartly, and the UAE has been very successful at attracting founders and startups to the country and giving them a lot of exciting sort of opportunities. And that's a feather in the cap of what the UAE has been doing, which is fantastic. So they're able to attract this from the UK to come out to set up shop in Abu Dhabi in 2022, which is phenomenal. Now, then what? So then you come to see what is the really underlying business model. So you've got companies like Basem and Middle East Venture Partners going after it, which is great. EAND as well. They'll do their homework to get in before they invest in such a play. But if you go down to the underlying technology and you take out one of their core operating businesses are in the medical claims processing. Now, my background is predominantly healthcare and education, although a lot of it's on the ed tech, more so than the healthcare. But at some point, I could have sworn that apart from every other health tech investor that founder that we ever came across, maybe 6 out of 10 were trying to solve that insurance claims operation. It's such a massive can of worms out here. And to be honest, almost 3 or half of those that we saw had phenomenal solutions. So technically, you're not in any need to disrupt this space, and you're not in any specific need to come back and do something that's outside the box here for this. And that's where I think that if that's where the direction is going using AI, it's almost like overkill. You are solving a problem, you're making it more efficient. It's like you're getting your burger 3 minutes earlier than what you need to. How much of a problem is this going to solve to the current ecosystem, the consumers, this and that? And again, I grapple with that sort of stuff. Will you oversubscribe a $55 million round for something like this Series A? Yeah, I don't know how much value add is happening there. So that's kind of my
Basem, let me just push back a little bit, because they're claiming that they save 50% of the cost. They reduce the need for human capital because of this automation workflow that they're working on or they're offering. Doesn't that add real value here?
It does, absolutely. But again, the starting point is that the existing solutions that are out there are saving phenomenal amounts of money already. So again, where's that 50% mark? Is it comparing to competitors that are not using artificial intelligence that will incorporate AI? It's not that they're not, but it's not their forefront is getting a claim, being able to process it really quickly, going through the systems and solving for that. So there is a component of machine learning that's involved naturally. So where does a company, again, there's a lot of brand perception, there's a lot of name play, you drop name dropping, you get that, and then people get the hype. Unfortunately, I think that's kind of where it's at. Would I pay $55 million if I had them in a company like this? Absolutely not. Not for me, my friend.
Okay, Salem, what's your take?
Yeah, I agree with Basem totally. Actually, the value proposition of cost reduction, basically, that's what has been promised also by so many software companies that try to solve the medical insurance claim processing. So that's what we have been actually pitched for the past 7 years. يعني.
Yeah,
Add to
right.
that, yeah, exactly. Add to that, in Saudi specifically, if I focus on Saudi's angle, the government stepping in as well and playing. We have medical insurance council here in Saudi. It's regulating the medical insurance. They stepped in and they developed also their own platform, where actually they play some role here. They don't do it fully. They also collaborate with the private sector as well. But however, they do partially through their platform, part of the claim processing. So I don't think focusing on this يعني, specific use case, and this is by the way, يعني, me personally or Sadu or most of the VCs, how we value or how we make a decision, an investment decision in an AI company. Basically, we try to dig deep into the use case they are trying to launch first. If it makes sense, if it's big, it has to be something that is AI specific, يعني problem. If it can be solved by traditional software, I don't think you have something يعني, to sell here يعني, as an AI company.
But Salem, let me double click on this. What do you mean by AI specific? Like we've seen some AI companies building dashboards and provide more analytics. They read documents and then provide insights from those documents. We've seen AI companies building automations. We've seen AI companies replacing employees. They say the AI employee, sometimes with even an avatar. Some AI companies are doing infrastructure plays. What is the AI companies that you're looking for, especially for B2B?
Something similar to AI agents, يعني specifically for customer success, sales. I don't wanna sound like I'm full on يعني believing in those specific use cases, but يعني it's a natural progression with the advancement in technology. Since we saw human beings first doing fully 100% of the customer support calls or requests. Then we saw chatbots where it wasn't up to par. Now it's with more intelligence, with more advancement in understanding human language, either voice or text. Now AI, at least in this use case, it makes sense. So bring me something similar to this. Yani it came as a natural progression because of advancement in technology.
Basem, what's the AI you're looking for?
Yeah, I mean, I think the embedded words were agentic style, and that's where this kind of seems to solve the premise. But again, the underlying business model or solution here does not seem to be very convincing from my perspective, having seen a lot of similar sort of platforms in the past that probably, and maybe contrary to what I had said there earlier on the super apps, and I love how I can contradict myself in less than 15 minutes. But in a situation like this, when you are talking about claims, you do want a very focused company to do the insurance claims for you, that just speaks insurance claims as an example. And I'm sure there's other sort of specifics. So here, the one-stop shop to give you those multiple solutions is overkill, I feel, without the sector expertise. And again, what is the incremental value from one player to another? I don't see that, but maybe it's there.
I was going to just say two things I suppose it has going for it in its favor, I think, especially versus other regional AI sort of enterprise plays, is they have a lot of cash. It's 55 million raised, it's coming on the back of 42 million, over $100 million raised. I mean, I think versus any other player that we've seen regionally. And I think the other thing is strategic partnerships as well. I mean, the previous round back in 22, G42, the Al Maktoum family directly, you've Ian coming in this round as well. I think that all helps.
Absolutely. And those are, again, the hidden hands of God that are coming into play with this game. It's almost an unfair advantage. Again, here we are. And it is, that's what we see a lot of sometimes where, you've got a better operator, better skill, better technology, better performance, better efficiency. And it's been, put on the side because of these, I don't want to say unfair competitive advantages, but that is the case. And then one more thing to add on to that, they succeed quickly, and they make the news. That's what they do. They make the news, they create the hype, everyone's racing, they sell better, they grow quicker, but then they also aren't managed as well because of that. You know, in many cases, you get corporates of this with this type of involvement that end up, you know, becoming a much slower sort of moving machine, and it's not as effective. It's not as agile to do pivots, etc.
Yourself in their shoes. You have all this cash that Jamie was talking about. You have this new technology that everyone is excited about, and you fear that you might be boxed into one vertical versus all others. So you're trying to go horizontal, experiment with so many, use cases. So what's the bet here? Should they dominate a narrow use case and excel at it, or go broad and hope something sticks after all of these experimentation?
I would make one thing work and then sort of expand, we've seen so many attempts that we'll do it all. And then next thing you know is that, wait, nothing's been done properly or whatever. Or this one's starting to work. Let's all now shift this big ship to focus on that. I don't think that works. Maybe technology makes it a lot easier for you to pivot, but it's just, there's so much. If the strategy's at play, you got to follow your strategy and heart and gut.
Salem, what do you think?
AI stack mimics software stack. Basically, you have applications, platforms, you have infrastructure play as well. Today, infrastructure play, I don't think it's globally even. I don't think you have room here. However, if you want to play it platform level, you can play the multi-use cases play well if you target the right vertical. The vertical that's with the most need for leapfrogging, I think, in terms of digitization, that's where you go and play there. I think otherwise, just stick to certain use case who excel at it, as Basem said.
Let's move to a giant AI player and see what they're doing to expand even more.
Yeah, it seems like Sam Altman is just hell-bent on pissing off Satya Nadella as much as he possibly can. Yeah, this is something that broke, I think it was yesterday, from the information reported that OpenAI is developing productivity features for ChatGPT that is going to put them on a collision course with Microsoft Office, which I think is no harm. I was not the biggest fan in the world of that particular productivity suite. But Google Workspace I quite enjoy. But look, I mean, I'm here first. But yeah, it's some background to the Microsoft side of things. Obviously, Microsoft holds a 49% stake in OpenAI's for-profit unit. And look, there's a ton of drama going around there. I think this is going to be the most engaging soap opera over the course of the next couple of years. We're going to have this sort of AI progression, and then in tandem with it, we're going to just have this mess. Because I think it can only be a mess.
Let's talk about a startup going after its major shareholders' major product. What do you think of that?
There's so much controversy in that. I don't know where to unpack this, but controversy in a sense that, they started creeping up into its space. So you've got Microsoft and Google coming into the AI. So they've got all their tools to counter OpenAI. So that's, or maybe collaborate with it. But in all cases, that's happening already. So this type of war needed to happen, or will be happening. I mean,
Basem, I totally understand the war between Google and ChatGPT or OpenAI, but with Microsoft invested in OpenAI, and they own how much, 49% of the company, and they don't have a say in steering the direction of the company.
I think this tells you, Ahmad, the story about the model of corporates becoming minority investors in startups or technology companies. I'm assuming here Microsoft is not doing this or are not aligned with OpenAI on as a play where they are trying to compete against themselves. Okay, if it's not that, if it's not the case, then I think it's just a pure power struggle where the Microsoft is lacking control. Even with 49%, you still have zero control about the strategic directions of the companies. So either you come in with bold move, acquiring the target companies fully, or at least you take majority ownership in those companies. I think it's just super clear where this model doesn't work anymore.
Yeah, and there's been a lot of drama, as we know, in the beginning of this relationship that they had. That doesn't seem to have settled in a way that complements or helps the innovation mindset, so that the developer it's almost like they still they still have this neck to neck competitive play. I mean, if you think of OpenAI coming into this, I'd really question their security and privacy policy. How's that going to work? And coming into to have this collaboration at the cloud level or at the productivity level. So those are kind of questions that I would also have. It's fun to be playing at that level. It's kind of like you take all these strategic directions just because you think, hey, let's do that. Why not? And then they try it out and see if it works or not. They've got so much money, as Jamie always tracks, which is important, and they might as well put that money into some sort of play. This seems to make sense.
But back to the heart of the article, it seems like the thesis that SaaS is actually losing their competitive edge with the emergence of AI looks like it is coming true. I know it's too early to judge. We need to see those productivity tools in the hands of customers to have a final judgment. However, looks like this is the first batch of companies coming in and actually killing productivity tools and SaaS companies as a whole.
Yeah, if OpenAI becomes your documents, your spreadsheet, your chat, your email, your assistant, what does that leave productivity SaaS companies to work on? Help me with this. It seems that ChatGPT or OpenAI is targeting consumers, but indirectly, they're also targeting SaaS. They're targeting enterprises, right? What do you think, Basem?
Yeah, I mean, they start with one market segment, and then it starts appealing more. If I'm using it as an individual, then naturally I'll become an enterprise user, and I'll gear towards it. So that's kind of the natural direction. Yes, I've got all this brand equity now that allows me to launch a whatever platform, and people will say, hey, let's play, let's try that out. So and it's fresh and it's new and it's exciting. So I think there's the chance of them. I mean, acquiring a large consumer base and funnel and taking it into the enterprise level is going to be quite dramatic, I think. And if they solve for security and privacy.
Okay, so we've seen Google Workspace took years to take meaningful market share from Microsoft Office, right? Now we're seeing OpenAI trying to compete with those two big giants. And now, do you think that would be faster? Which strategy do you think works better? Google introducing AI into all of its existing tools so that it's enhanced and it has a new face, the modern AI face, or starting from scratch, like OpenAI, trying to create the tools from scratch that are AI native?
I'm not too sure which one would be a bigger, sort of a better strategy, to be honest, on this one. Salem, do you have any thoughts on that?
Me too, as well. I think it's hard to decide.
Yeah, and they try it, it doesn't work, they pivot, right?
For me, as a user, when I started using Google Workspace, the trick was working online. Everything is on the cloud. But then Office moved to cloud-based. But for me, that was the switch. And since then, I never went back to Office. And even on my device here, I don't have Microsoft Office. I use Google Docs, Google Sheets, everywhere. Maybe if there's a new promise of everything AI native, maybe I'll move and never look back. I don't know.
At the end of the day, I think that's maybe also we're a bit too ambitious, or maybe they're a bit too ambitious in trying to think that they'll solve, all our productivity using AI. I mean, you still need a lot more human intervention into this. I mean, there's not enough machine learning to force you to file or do so much for the individual. So, maybe it's still a bit too ambitious at this time. But if you're a corporation, then naturally there'll be a lot more systematic requirements for our artificial intelligence to be leading on your productivity.
Exactly. I think it's totally about the AI features that you are gonna embed in your productivity solution that's gonna excel my experience as a user. If it's 10 folds, then probably they have something. Otherwise, if it's just making the existing features a bit better, then I don't think they have a potential to conquer a big market share.
We want some machine learning to come in, do all our our marketing, all our messaging, all our management, all our even podcasts, have a digital twin to come in and do this. So, I think at the end of the day, it might be a bit too ambitious. You still need that, flexibility to have the human intervention.
And let's end with this. What advice do you have for SaaS companies? What advice do you have to productivity startups? Anything you can, strategically they should think about?
embed AI into your solution. Start today, يعني you shouldn't wait.
Salem, you make it sound like, give them some food, it's, yeah, they need to eat, give them food. But I think maybe, it is the buzzword of today. I mean, AI needs to be incorporated, but mainly on specific applications that have high volume, right? I mean, I've seen I'm advising on an adventure travel company, and they're saying we need to get AI. I'm like, for what? How many customers do you deal with on the adventure, level? It's like, oh, we only deal with 70 a month. I'm like, what are you trying to do? How are you going to get AI to improve that? Customize certain areas, but you're doing a little bit too much. It is an application, a very specific application, but absolutely, it is important that every company, it will disrupt every operation that's out there where creativity is not involved for today's time being. And you can maximize efficiency by incorporating the right amount of AI into it.
Before we wrap up, do you want some context on the ValU share price?
Yes, please.
On exactly why it was set this. So because it was a direct listing, they weren't obligated to set a fair value price. So the 0.78 is a completely symbolic for price discovery purposes. So it actually has nothing to do with market cap or valuation. It was purely symbolic because, they were just distributing shares to its existing shareholders. That was like a trading floor reference. So that's why it increased by that colossal amount. It's not in any way sort of reflective of. So there you go.
All right. Thank you for that, Jamie. The hidden hand of God that comes into play here, right? Because there was it was going to be hard for us to visualize that.
There you go.
Yeah.
Thanks for that.
And my 2 cents on the SaaS side of things, update your CV. I think that's what I would be advising.
No, you don't update your CV anymore, Jamie. Your AI does that for you. Come on.
That's true. I'll advise my agent.
And then my agent's gonna sit into an interview with your agent, right? To see who's gonna get the job.
What a world.
And suddenly I talk to 200 companies at the same time. And within one day I find a new job, right?
Exactly, right. Yes, I picked a job, right? At least.
Before we wrap up, a big thanks to OCTA for sponsoring today's episode.
If you want to get paid faster, access financing, and automate your receivable process, head to weareocta.com. That is WEAREOCTA.com, and take control of your accounts receivable today.
With that, thank you so much, Basem, Salem, and of course, Ivo, who had to leave us. And Jamie, thank you so much for bringing us all the news and following up on the news in the episode.
There we go. Always working.